Hello, everybody. Jackson here with the Wealth Squad. Today we'll be talking about this latest bear market rally and some interesting news coming out from Walmart. So last week, if you do remember, I talked about how Walmart would announce that they are earning 10% less profit-wise. So the stock went from 132 to 120, right? That's roughly a 10% drop. And that makes sense because if you're buying a company earning, let's say, 100, let's say $50 billion in profit, right? The company's earning $50 billion in profit and it's trading for $50. If the stock price does not drop 10% when the net income drops 10%, then the stock is overvalued, right? Let's say we bought Walmart stock right here for 130 roughly, and we had the assumption that they are going to earn what they previously said they would in the next year. They weren't going to earn 10% less. Well, we buy it at 130, and a week later, it's still 130, or I'm sorry, 2 weeks later, around then. 2 weeks later, it's 130, but the company is earning 10% less than what it should have been. You are getting a worse deal holding here than right here, because here you did not know that the company was going to announce that they are earning 10% less a year. But here you do, and the stock is the same price. So not buying, essentially Walmart stock trading at this price at 120 makes sense because the stock should have fallen 10% because the net income fell 10%. What does not make sense, however, is the recovery since then. Of course, it has to do with the market increase. We could check the market later, but you can see just a natural increase in the past couple of days. But when it comes to Walmart, which is I'm pretty sure the biggest company by revenue, announces that they're losing 10% in profit for the next year because of rising costs, lower demand, higher infrastructure costs, higher logistics cost, getting it from Oregon to Washington, Washington, D.C., getting it from Texas to Maine, getting it from Florida to California. All these different costs that is internal within their company is now costing more. And that's just scratching the surface. Right? I just talked about truck driving. You have to think about wages. You have to think about gas. You have to think about the different foods that they're transporting, how that's all costing more because fertilizer costs more and how labor costs more for those people as well. It's a giant, big mess. And the fact that Walmart announced that they're earning 10% less, good for them, right? They're trying to be truthful to their shareholders. But it bounced right back up like nothing happened. And I think that is where the confusion starts with many investors. So let's look at Target. Target in the same time frame, you can see Target's closest competitor, Walmart, announced a 10% cut in yearly profits, right? Stock fell from 157 to 150, fell $7, roughly 3 to 4%. But since then has climbed a higher price, right? A 10%. It climbed from there, 10 to 11 to 12%. So you're looking at a 12% increase since the announcement that the closest competitor is losing 10% from their yearly profits. More than, they're losing less. They're making less than what they should have been just 2 weeks earlier. So that has not even crossed the target company's stock price mind. Let's just say it has a mind for this example. But in any case, you should be worried because the largest company by revenue announced that it's hurting. It's hurting because it's not making as much money as they previously thought they should have by 10%. And the fact that these stocks aren't getting extremely hurt, like sure Amazon fell, sure Target fell, sure Dollar General fell, sure of course Walmart fell, but they all bounced back like nothing ever happened. And that's the problem with many people today is they forget too easily. They forget too easily when it comes to their investments. So if I were you, I would at least analyze these stocks a little further, maybe stay away until they correct some more, because 10% is nothing to laugh at. That's a lot of money for anyone in any case or any business. So I hope this makes sense. I hope you understand my view of the current market. I think we are a little overextended based on just rising costs, but the other side of me thinks that we have room to recover because gas prices are down, food prices are down. These prices that worried us last month or the month before are no longer as apparent. So it may bring back additional spending. That's what we need in this economy. It's more spending, right? More consumerism. But hopefully that makes sense, guys. If it does, please drop a like and comment what you want me to talk about next, or any questions or concerns just based on this video alone. Thank you so much for watching, and I will see you Friday.